Gautam Shah is founder, Goldilocks Global Research. Gautam, great to have you with us here. Good morning. Thanks very much for joining us. New highs, I guess, across indices. I just want to start with the Nifty Bank. It's almost funny because, so a viewer wrote in saying, well, when you start asking about markets and what will do well, just preface your question by saying that, please tell me what will do well. Don't ask and exclude financials, because financial seems to be consensus out there. So वो तो ठीक है, बाकी बताइए. But so I thought I'll start with you and how you think about it on financials, Nifty Bank, and the structure there. PSUs, privates, go on.
Good morning, Prashant. Banking might be consensus, but you can't be complacent. The reason being, it's such a big heavyweight for the Nifty and the Bank Nifty that if banks don't do well, our markets go nowhere. And I think we've seen this over the last few years. And I'm liking the way the Bank Nifty has shaped up beautifully in the recent past. Just a couple of months back, it was languishing at the lows and people were questioning banks because of the positioning of the economy, and then the GST measures kicked in and people started to believe that things are looking better. So if banks are a reflection of the economy, which we want to believe, then I think it's a good place to be in. And I think the chart setup has been phenomenal. The fact that the Bank Nifty has led this entire market move and getting past that 58,500 resistance number in the last couple of days, I think is a bigger positive. So I'm tempted to believe that the Bank Nifty is moving towards that psychological number of 60,000 in the near term. And over the medium term, you could get a 67,000. So there is still about 10-12% upside for the Bank Nifty. And if that were to happen, then the Nifty and the overall market is going to be safe. But within the banks, I think in our last two interactions, I did speak about PSU banks being the poster boys. I think they've had a phenomenal run if you look at the top 4 or 5 names. And I think the PSU banking index is going to do much, much bigger things even from current levels. The private banks will do well, but then it's going to be in line with the Nifty returns. But the real trade is with PSU banking, and the overall financial space, NBFCs, housing finance companies are all likely to do well and take this market higher.
Okay, so sounding optimistic, and that's how you've been for a while, Gautam. Good to have you in. So within financials, let's try and break this down, right? Because it's a very large universe. And there's so much going on. There are all these deals that the tier 2 banks are now getting a huge surge of capital, right? Foreign capital's flowing in. So now, prioritize it for us. Mid-sized banks, large blue chip names. Should you look at capital market plays? Because a lot of these stocks have come back despite all the regulatory back and forth. Should you look at insurers? Just, drop a waterfall for us, so to speak.
See, I would now stay away from mid-sized banks because I think they've had a phenomenal run. I think we are behind the curve. We are no more ahead of the curve. Money has already flown in. We've already seen a massive trend for many of these banks in the last few months. So entering them at these levels might not be ideal. But then if you look at the top PSU banks, even at current levels, including the top PSU bank there, I think there is potential for 15 to 20% upside, something which I don't see from any other financial stocks. And I think the top NBFCs also we've liked. And third in the pecking order would be the housing finance companies, which I think is a trade on what RBI has done and the pickup in the economy. So that would be my picking order: PSU banks, NBFCs, and housing finance companies. The typical HDFC Bank and Kotak and ICICI, they will do well, no recommendation. But then, as I said, they're just going to mirror Nifty returns and would not do anything special.
Okay, sorry. So your order of preference is PSU banks, housing finance, and what else did you say?
NBFCs.
NBFCs. Within NBFCs, I have to ask you about gold financiers, right? Look, what is going on? I mean, what did Muthoot do that day when the results came out? 10% and surging. So we got your order. It's PSU banks and it's housing finance companies. Within NBFCs, are there any specific pockets, and where do these gold financiers fit in?
No, I think we have become neutral on gold and silver. We believe that these are good levels for profit booking. Gold and these gold financing companies have typically been a proxy trade to gold and silver in the last 1.5 years. I think it's already played out. These are good levels to indulge in profit booking. I know there is a little bit of madness on the screen, but that's how tops are made. That's how stocks become overbought. I don't think the trade is there. I think this market is moving to other pockets. I mean, if you look at metals, the comeback in capital goods, comeback in engineering and industrial stocks, slight comeback in pharma. I think these are some pockets that we like. And overall on the Nifty, I think we continue to be quite positive as well.
Okay, all right. Hi, Gautam. Good to hear your thoughts. I remember you telling us that by January, you probably could see the Nifty taking aim at around 27,000 odd. But I think for the year end, you had a target of around 26,700. So let's revise that number. Nifty, the small cap index, the portfolios are not feeling like the markets are on their way to fresh all-time highs. The small cap index is facing resistance. I think the level you were mentioning is around 20,000 odd. While the mid cap, the target you had set earlier, you said once mid cap index gets past that 60,000 odd, it could look for more. So tell us the targets both on the Nifty as well as on the small cap index.
Well, thank you for revising the numbers. I think you were spot on there. We continue to be quite positive. I think 26,100 is really the line in the sand. The market is trying its best to get past this number. We were dealing with a lot of negatives a couple of months back, but I think as we speak now, the news flow from US is better. The AI trade seems to be reversing. Domestic money continues to be strong. There is definitely lower FI selling. People believe that the GST measures will kick in, and we are in a seasonally positive period. And the earnings season has gone off relatively well. Given all of these factors, I do believe that the market is at the perfect platform to confirm that breakout above 26,100. And once that gets confirmed, we are looking at 26,700, possibly this year itself, and thereafter 27,500. But I still believe that the bigger trade is in the mid caps and the small caps. As we speak, the mid cap index is at lifetime highs. The small cap index could take a move towards 20,000. So I think one big wave of strength in the mid caps and small caps could be coming over the next 3 to 6 months, while the Nifty does well, but does nothing special.
Okay, all right. And the other one you had spotted out the last time around was the big boy. When the team requires the big boys to play, you turn to the largest one on the index, Reliance Industries. I recall you saying that was good for more. It seems to have got its act together. Now it's just, I think, 2% away from the 52-week high. How is that looking on the charts? Will that be one of the leaders if we need to, move towards the 27,000 odd mark?
I think the leader will still be the banking and the overall financial space, but I think it will be very well supported by the energy space led by Reliance. I've liked the way it has shown relative strength in the recent past. It's a stock that has not done so well in the last 1 year, but I think the signals are there to suggest that even it could move to lifetime highs and beyond. And not just Reliance, the entire energy index seems to be on the cusp of a major breakout. And if that were to happen, I think a 15% move on that index is likely. So IT, we remain negative. So I don't think technology is going to do anything special, because I think that's a multi-month underperformance that IT will go through and is still going through. But Reliance and the entire banking space will help this entire market higher.
And you briefly mentioned the metal index as well. And I recall, a couple of times ago, I think maybe in September, you said the metal index is good for a big melt up. I think you were talking about 20% up out there. Actually, it's done very, very well from that September chart that we had. From ballpark 9,000, we're holding at around 10,500. So we've done 15% of the 20% you're talking about. And with metals, we know it's about momentum, not so much about valuations. Where's it headed from here?
I just had a call with a couple of institutional investors a couple of days back, and the question was, how can you build a technical case for metals when fundamentally we are not in a position to join the dots, which I think is a fair argument, but maybe market knows something that we do not know, and the news flow will come out at some point of time going forward. But clearly base metals, I think, is a very big trend. I mean, look at copper, zinc, aluminum. I think some of these base metal charts are excellent. So if you want to believe that metal stocks in India will be a proxy to that trend, I think that could be one explanation. But the chart setup is phenomenal. I'm looking at another 15% upside from here. Our working target for the NSE Metals Index is about 12,000. I think we will get there gradually. And I think it's going to still surprise a lot of market participants, because everybody is focusing on other sectors while metal stocks, I mean, look at the top names. They're either trading at lifetime highs or still very, very strong.
Just one maybe risk factor, Gautam, is have you looked at US charts, etc., all okay? Or you think there's I had this chat with a completely fundamental investor, but he was pointing out, Naren, that the risk comes from US. If US falls 15-20%, which is no one's case right now, but you've got to look at outliers in that sense. I mean, no one will be spared. But technically, NASDAQ, Russell, Dow, etc., have you looked at those?
Prashant, for the last couple of years, market participants have been saying that there is a possibility of a 15-20% drop for the US, and it just keeps moving higher. That's been the case for a year and a half, and we've had massive uptrends. In fact, we turned bearish on the US a month back in many of our recent reports. But while we were analyzing US, and when we looked at India, we felt that the correlation is not there. And I think a great example is the last 2 weeks, because we've had a sizable correction in the NASDAQ, the S&P, and the Dow. But the Indian market markets are still around levels of 26,000 because, this correlation we've talked out over the years. If you actually divide the Nifty by the NASDAQ, we are at a long-term support. So I'm tempted to believe that if the US markets were to see a plain vanilla correction, which is typically 5-7%, which I think will play out, I don't think Indian markets will get impacted. And as some analysts have been talking about, AI trade reversing is great for India. I would be in that same boat. And I do believe that money will start flowing into emerging markets, including India, a lot more. Any which way, I'm firmly of the view that China is the next big opportunity for the next 18 months. I've maintained that. So China will be the poster boy market going forward. But India, I don't think will get impacted because of US weakness.
And for your clients at Goldilocks, how are you advising them to get exposure to China? I mean, through funds?
I think there are some ETFs through which you can take, exposure. There are limited number of funds. I remember a couple of years back, there were limited funds in gold and silver as well, but they all came in and, people participated. So I think China opportunity is limited. I'm sure it'll get better as the price action gets better.
Okay. All right. Gautam, thank you so much for all that perspective, local as well as global. Quite helpful. And we look forward to the next conversation. You have a good rest of the day.